I just wanted to go over some, some basic information on how to look at the charts and see what kind of action's happening, and to figure out when to buy and when to sell. Again, I'm not a financial advisor, guys, so this is all just for educational purposes only, and don't invest any money that you can't afford to lose, and don't invest solely off of what I recommend or don't recommend. So anyway, real quick, I just wanted to go over, this is a GDAX. This is how GDAX is set up. So if you haven't already signed up, guys, you basically can set up your account through Coinbase. I'll leave a link in the description below. Sign up for your Coinbase account, and then you can use GDAX. It's a really nice platform. They only sell the 3 coins that Coinbase sells right now, which is fine, especially if you're new to the whole thing. But basically, their charts are pretty plain and simple. There's not too much going on, but I'll kind of go over what each thing is. So first of all, on your screen, you're going to see, this is the order book. And basically, these are all the people that are trying to sell it, and at what price they're trying to sell it at. And then on this size of it, you're looking at the size of what's coming through. So right now at 17,750, there's 14 bitcoins that are trying to get sold, and at 17,749.99, there's 26 bitcoins wanting to be bought. So that's important to know, because that'll establish like where the big size is coming in, and where that either that resistance or that support is, right? So depending on which way it's going. But again, 17,750 is a big round number if you ask me. Anything that ends with a 0, nice round number. 17,500, 17,750, 1,800, something like that. That's where you're going to see probably the most sales come in. But what you'll see is, as long as people are buying it at that price, or right around that price, that's just setting up the resistance right now, because like I said, that's up on the high side. Right where we're at, that's the peak of resistance. If we can break through that resistance, there's a good chance that this thing will run. And what you'll see is a whole bunch more buyers coming in at the 17,750, 17,751, or whatever it is, and then that's when you'll see the price action really start to take off. So that's important to remember. And what I'd like to do, though, since I'm a day trader and I'm trading this thing daily, which being a day trader basically means that you're going to buy and sell it in a 24-hour period. So you're looking for the lows to buy at, and then obviously you're looking for the highs to sell at. And being able to see this, like I know if I would have bought it earlier today at 17,500, I would know that this price right here at 1750 is probably a good spot of resistance. So I'd be trying to sell into that spike basically whenever it got up to 1750. But that being said, while I'm actually day trading, so a couple things. One, I'll always glance at this just to see where there's big numbers coming in. Right now, there's not really much more. Which if this gets eaten up right now, this 17,750, there's only 2.5 Bitcoin left. If that gets eaten up, then you can see the price starting to go up, because obviously you can see not a whole lot of people wanting to sell above that price, right? Now that doesn't mean that people can't come in and start selling at 17,750 still, but basically it's going to tell all these people that you're going to have to start buying at 17,750, or else you're not going to be buying, right? So that being said, more importantly for day traders is looking at the trade history. And basically all you're watching here, all the green orders are orders that are being bought at the price that's being asked, and all the red orders are the ones that are being bought below the price that's being asked. So right there, boom, it just happened. You guys just saw this live. It went from 17,750 to 1774, and again, it's just because that 17,750 got eaten up, and nobody was willing to sell after that. So now the price just jumped like huge, and I'm glad I got that, because what I was going to explain is, once you start seeing this whole screen lighten up all green, the price is going to start going up. So boom, there it goes. It's going, right? And now while you're watching this, if you already bought in earlier today, you're going to watch this and wait for it to start turning red again, right? Because red means that's the time where it's going to pull back. But right now, it looks like, it's all green, green skies. Again, we can look at the book of work. 17,784, there's 7 Bitcoin being sold, and there's already 5 people wanting to buy it at that price. So there's a good chance it's going to stick around here for a little bit. But if this gets eaten up, again, we'll see it starting to take off again. So basically, that's what you're looking at as you're trading. I try to keep this one open. Like I said, obviously I look at this book order book first to see if there's any big volume coming in. And obviously, you just saw that jump up to 18, and now it's dropped back down to 9. But just seeing where the big orders are at and when they're coming in, and then what kind of buyers are getting lined up. But then I'll keep it on this kind of trade history and just watch. And when I say it's going to go red, I mean it'll really go red. Like all of this will just light up all red, and you won't see like any green coming through. But right now it looks like it's still pulling off bearish or bullish. I mean, and you can see we're just now getting ready to break that level of support. So the other thing, I always glance at the 1-day chart first just to see what it's doing. And right now you can see it's kind of flagging. You got this great resistance, right in the basically right where we're at right now, 17.8 basically. Obviously a few days ago it jumped up to almost 20,000, or it hit 20,000 according to GDAX. But you can also see that this line here and this line here, what those guys are, that's your moving averages. So this orange or reddish color one is a 12-day moving average, and the blue one's a 26-day moving average. So you always want to see the orange above the blue. That's always a good sign, saying because it's basically saying that over the last 12 days, obviously the price has been going up more than the past 26 days. So that's always good. When these lines kind of cross, that usually signals a reversal. So what we're doing while we're watching this line, guys, I basically watch this line on like a daily chart. I'm watching to see where the first green day that touches this line is going to be, right? So as you can see, it hasn't really got down over here. It kind of dipped down and touched the line, but it popped right back up. But what I'm talking about is like on this day here, see how close it is to that red line, that 12-day moving average. More often than not all the time, but more often than not, when it gets close to that 12-day moving average, you'll see a big pop. And Bitcoin has been doing this perfectly, over the past several days or weeks or whatever. So yeah, because each one of these candles is a day, and basically right here, it basically touched that line, and all of a sudden it popped and took off, right? Then it kind of started coming back down, but it never came down and actually touched the line. As far as the real body on the candle, it came down, dipped down for a brief second to touch it, but popped right back up. It's been kind of back and forth, but now you can see the gap is closing, and typically, like I said, more often than not always, once the next green candle touches this line, you're going to see the next big move, and you can see that throughout the history. So on this day here, you saw it happen. It basically touched that line right there, popped up. Same with this day, almost touched the line there and popped up. Same with this day over here. Either one of these days kind of touched the line and all of a sudden started popping up. Same with this one. And then over here, you actually saw where it started downtrending, right? And it actually dropped below the line. So if you're watching these candles and the candle comes down to meet the line, chances are it's going to go below. It's going to drop even more. And that's exactly what happened on this day right here. It started coming down, touched the line. Once it got there, it started really dropping off, right? And then it had a couple of down days. And then it finally got a green day, and once it touched the line, boom, it took off again, right? And then kind of traded sideways again, touched the line, popped off again. Touched the line, popped up. Touched the line, popped up. So basically, I'm looking for this one to touch that 12-day moving average again. But basically, that's what you're trying to do, And again, you want the line to come up and meet the candlestick for the day. You don't want the candlestick to come down and meet the line, because that means it's going to probably go the opposite direction, right? So if it comes down to the line, like over on this day, it came down to the line and broke through and kind of fell out, and we actually had a downtrend for a few days. For 4 days there, we had a downtrend, right? So that's kind of basically what you're going to do when you're looking at the 1-day chart. You're just looking for how it's performing. Obviously, this is in a bullish uptrend. It keeps going up. This is obviously, a couple days before the futures came out, and basically I think people just got scared, so they started pulling their money out. They weren't sure what was going to happen, and you had a few days of kind of downward action, and then, people, I think, finally started realizing that, the futures weren't going to affect it as much as they thought it would, so it started kind of coming back up like it normally does, and I think, in a few days you're going to see it take off a little bit more. Hopefully we can break that 18,000 line of support, and then maybe get back up to 20 or so and start trading sideways for a little bit around there. But anyway, so that's what you want to look at if you're like a long-term trader. You're going to basically just go off of this chart and just know that, you know, the momentum's going up. It's in a nice uptrend. Not really a bad time to buy when it's in a nice uptrend like that. And then you really don't need to worry about this so much unless you're just trying to time a good time to get into the market. You're looking more at this. So like right now, you know, there's 25 Bitcoin at $17,787. So that's going to take a while to get eaten through. You're going to have enough buyers wanting to buy it at that level. Now, if the buyers drop off, you know, then the sellers are going to sell off, and then you're going to see it go the opposite direction and start pulling back some. But basically, back to actually day trading. So the first thing I do when I day trade, I look at the daily chart because I want to see, you know, what the trend is and try to figure out where my support and resistance are. So in case you don't know, support is basically the bottom of the candles, you know, where, you know, like right now we have a lot of support at basically $16,700 and, you know, $700 because you can see across all these lines, there's a lot of spots where the candles either started or stopped there. And that's basically going to be your support level. And then resistance is always the top of it. So think of resistance as like the floor above you. You know, if you live in a 2-story house, the floor above you would be your resistance, right? And you can jump up and punch it, and you know it's going to take you a little bit before you can actually break through that floor, that resistance. And then once you break through that resistance, though, you can go all the way up to the next ceiling, right? And then bounce off the next ceiling, and then you'll come back down and you'll land on that second floor. So that's basically how support and resistance works. And you can see that all throughout this chart. You know, like we got a lot of support here, and it kind of fell, bounced, came right back up to that support level, and then it punched through. So it punched through that resistance, which was right at 8,500, and popped all the way up to here, which is, you know, at 10,000, and then it did dip a couple of days back down to 8,000, which is where that level of that resistance ends up becoming the support, right? Because you broke through that floor, and then when you come back down, you land back on the floor. So now instead of it being resistance, it ends up being your support. So, you know, it breaks through, comes back and kind of bounces, breaks through, comes back, you know, bounces, and then it broke through this support at, you know, basically 10,000. It broke through that and then kept climbing, and then had some resistance, you know, right around the basically $12,000 mark, and then it broke through that. And when it broke through that, it really broke out, got all the way up to 20, came back, and you know, so it opened the day down here at 14,000, and it closed the day at 17,000, and then basically, so you know, 14,000 ended up being your new support, which you can see it dipped a little below there on a few days, but didn't stay down, and then it came up and it bounced off the resistance, which the resistance was 17,000, you know, probably 17,500, somewhere around there. Probably get a nice fat round number, like I always say. And then it came down. It never actually got down to the resistance. You know, typically you can see probably a 30% pullback, if not maybe 40. You know, 40%, or like this one actually had probably, you know, almost a 50% pullback because it had a huge day. You know, typical days you're not going to see that big of a pullback, but on days like this, when it goes from, you know, 14,000 to 20,000, yeah, you can expect it to pull back from the high of 20,000, you know, 60-70%. And that's exactly what it did. It found its new level of support, which is right here at the, you know, 15,000, you know, call it 15,200 or whatever you want to call it. But you had 3 days in a row where it didn't fall below that. That's, you know, that's setting up some good support, right? And then the resistance, like I said, was already established over here at 17.5 basically. Had a couple days where it came up and touched 17.5, but it didn't quite break it. But again, it didn't drop all the way back down to the last resistance, so that's always positive news. And then today you can see it getting right back up and testing that mark. You know, if it can stay up above this, you know, 17.8, I think is kind of what we're looking for as far as the next level of resistance, breaking that, which right now, you know, we're still green. We're still getting a lot more buyers and sellers. So so that's good. Or a lot more people buying at the price that's being asked rather than below asking price. Once you see that switch, guys, that's what's happening is basically instead of people buying it at the price that's being asked, they're basically trying to get it for a little bit of a discount, and that'll start driving the price down. But hopefully you understand kind of what I'm going over. I know it's a lot. there's a whole lot to this kind of stuff, and then volume and stuff gets involved in it, which I'll do a video on that later. But I'm trying to do one just on day trading. So basically, what I'm trying to get at is when you're day trading, always look at your day, the day chart first, because that's going to be your longest time frame, and it's going to show you the actual trend. So this is in an uptrend. Anytime it goes from bottom left to top right, it's going to be an uptrend, and obviously if it's from top left to bottom right, it's going to be a downtrend. And typically the trends kind of stay going the same direction until you see a big day where it's going to where it might pull back, and basically like this day was almost like a trend reversal, but we ended up catching it at the support level and kicking it back up. But anyway, so then in day trading, you really want to change your time frame. 15-minute is usually pretty good. Like if you would have saw this, you could see where it dropped below this line, so it's going to drop down a little bit, just like I was explaining earlier. And then down in here, once you see this this candle start taking action, and when you see this again, this whole screen, it would be red until the buyer started coming in, and then it's going to turn green, and then that's telling you that it's going. And as long as this is all green, it's going to keep going up and up and up, and that's exactly what it did. It pulled back a little bit here, but then it opened at the close, and then it started kind of taking off from there. And then once you saw it break that line again, right, it really started taking off for the day, and that's exactly what happens. If it comes down to the line, it breaks through and comes down. If it goes up through the line and holds at this one, you can expect it to keep going. So buying at any time during this candle, even though it came back down over here and might have freaked people out, this candle is a great candle to buy. And then this candle would basically justify you making that buy. And then if you would have saw right here where it switched again from green to red, this the trade history switched, you'd have known to sell, and hopefully you could have sold up here at like the 17.8 8 range or whatever, and then watch it and just watch it go down. Again, it hits that moving average and then just really falls on its face, comes down, and then it bounces off of the 26-day moving average, right? So it hits the 26-day moving average and pops back up above it. But again, you can't hold it. And this whole time you're watching this, the whole time you're watching these candles, you're watching this, because this is determining what the next candle is going to be. So then you saw the same thing again, came down, hit the 12-day moving average and started dropping. And then it really took a big dip here where it even dropped below the 26-day moving average. And then, it switched and started its uptrend. So that's basically what you're doing. You're looking, you're trying to catch, the action and trying to figure out where to get in and where to get out. But basically, like on this candlestick, that's a perfect indicator that this is going to reverse and go down, because, the price opened at the close, but then it continued to go down the whole time. So this screen was basically red probably for this whole duration of the candlestick. And at some point, it got down all the way down to 17,750 or whatever, 17,740. But then it ended up closing back up at 17,800, 800, somewhere around there. So that's probably a lot. This is a lot of panic selling is what it's called. So when people they buy it down in here and they watch it climb and all of a sudden it starts going down, and once it breaks that mark on that previous candle, the 17,839, all of a sudden you had panic sellers. People are, oh no, it's going to start going down, so they try selling as fast as possible, and this thing will just light up all kinds of red. And then right when it got down to that moving average, somebody came in and you started getting buyers, and then the buyers started buying back, and that's what pushed that price right back up. So hopefully this kind of makes sense, guys. A lot of different things that you got to kind of look at to determine where things are going. Always be aware of the 12-day and the 26-day moving averages, and that should help you do it. So hopefully this video makes sense, guys. Subscribe, like, share, and leave some comments in the